Welcome to the Tradier Rundown. I wish the people could hear what we're talking about right before we get cut off when we go to the show, because I think they'd get a big kick out of it. But anyway, I'm Jim Youre. That's Bob Acino. How are you, Bob?
Good. I'm good.
Good. We're recording today. I know you're watching it live. Most of you are, but if you watch it delayed, the Fed came out an hour, 2 hours ago. All I can say is, holy crap! That should be the name of the show. The market seemed like it wanted to rally. I think what the Fed said was this much dovish. Seems like the market thinks it was this much dovish. What do you think?
I agree with you because I think they were dovish, right? So I think it was this much more dovish, but only in the context of the data we had. So, I mean, I completely agree with you, the recent data. Now, one could say that inflation has been trending lower, which for clarity to people, that means it's been going up at a slower rate, not it's been going down. And we got a couple of surprising numbers, a PPI and a CPI that were stronger, but I think Jerome Powell, in Jerome Powell style, said that's not enough. Now, Jimmy, when we did the little bit of commentary we do for the Tradier Rundown, you bought gold, and I think that was incredibly smart.
Yeah, the second I saw the print, I bought gold. Now, to be fair, I had buy stops in at the levels I wanted to before it, and they hit them. Boom, and I was off to the races. But again, that's adding to an already uncomfortable position I have in gold, Bitcoin, silver, platinum, and real estate. And my thinking is these are no confidence votes. This is somewhat of the bunker trade. And again, I don't have everything in this shit, but that's somewhat of the bunker trade. You still like it?
I do, because you have a reflationary trade on, a stronger inflationary environment, which I think the Fed admitted today.
Yeah.
And we'll talk about this with our guest too. So I'll probably save the rest of what I was going to say. But this to me is the Fed backing up a stronger inflationary environment.
Okay. And what I've said a million times, I always say this to interview our guests, there are plenty of people out there who think that Bobby Icino and I are full of shit. We have no problem with that. We can take a punch. But one thing you cannot argue is that for some odd reason, great guests say yes to us and come on our show. We have another one today. I'm about to bring in Keith Fitz-Gerald, principal of the Fitz-Gerald Group, a market veteran of 43 years, an absolutely excellent chef. He posts pictures of the things he cooks, and we're going to dive into that a little bit too. Fitz-Gerald, it's a couple days after St. Patrick's Day, so he's probably still hungover, but let's bring him in, Keith Fitz-Gerald. Keith, just lay it on the line right now. Bobby twice called you Fitz. I liked it, but you have to like it too. Do you like it?
Absolutely. I, of course, respond to, hey, you, or oh, no, it's him again as well. So I'm good.
I got to tell you, we had Scott Lincecum. You know what? Screw him. We had Scotty Lincecum on the show. And before the show,
I'm like, you say that he was a great guy.
No, he's a great guy. And he was a great guest too. Very intelligent guy. But I asked him, I said, Scotty, how are you? Good to see you, Scotty. Do you mind if I call you Scotty? He's like, yeah, I don't really like it. Which was funny. So I didn't on the show, but I'm calling it to him now. There's somebody, a fan of yours here, Fitz.
Maria,
through the screen.
Nice to see your name. And we are fans of Keith as well. Thank you for being around.
Yeah.
Thank you, Maria.
Thank you for that comment.
Okay, before we get into anything meaty, what's the maybe it will be meaty, but what's the last thing you cooked that you stepped back and you were like, Jesus, I'm a genius chef? What was it?
Oh, my goodness. We had a lovely salmon last night that was cooked with a light carrot basil. We served it with a Japanese dressing, some vegetables, rice, and miso soup.
Fantastic. Did you grill it or did you bake it?
Baked.
Nice.
Baked.
Sometimes I'll soak an alder plank or I'll soak a cedar plank and put it on the grill, throw some charcoal in there too. I like that too, but I love my salmon. But then one thing, I don't cook salmon very much because my restaurant, which is basically down the block, we have outstanding salmon. So it's always like, do I cook it or I just, get in the car and drive 2 minutes and grab a couple plates?
Makes a lot of sense.
It makes a lot of sense. Yeah. Okay, Keith, you heard what we were just talking about Fed today. They said basically 75 basis points of cuts by the end of 2024. Like Bobby and I said, we do not understand. I will contend that it's easy to say that markets like low rates and they don't like high rates. And I say that that's only part of the story. I think market like low rates when it doesn't seem like there's an actual argument for low rates, like they should be higher. That's the sweet spot. What are your thoughts on that?
Well, that's the trader in me as well. I looked at that. I watched the chairman's remarks. I have been harshly critical of the Fed for a very long time, and I'm not going to let up now.
Yeah.
I think that they are so far out to lunch, they're an insult to people who are out to lunch. So the idea that they're suddenly going to have 3 rates because, well, they can, really bothers me because, again, fellas, this is the group that missed transitory. This is the group that denied the crisis in formation. This is the group that supposedly was going to fix everything. So this fascination with Chairman Powell and this dot plot and every last squiggle in the verbal salad that comes out every time these guys make a statement really defies the imagination. So my key takeaway on this one was, I think he's boxed into the corner. I like the fact that he threaded the needle. But as usual, traders only heard half the side, and it was the one they wanted to hear. So they got on the gas, and off we went to the races.
By the way, I was about to say something else, but you just said I backed into a corner. Are you putting political as part of those things, backing him into a corner?
No, I don't. I do money. I don't do politics. I'm not smart enough to do politics, but money thinks money thinks it does politics. And so, in my capacity as an investment strategist, I don't have the luxury of taking sides. So I don't. What I look at is, what does this do to the liquidity? Where is it going to go? Which companies are going to move? And, again, the way the current markets work, and one of the great things that individual investors and traders have to understand is that, in fact, everybody thinks politics has an awful lot to do with it, but beyond the next 20 nanoseconds, that's probably not true. It's all about the liquidity wave. It's about the positions. It's about the way they're constructing what they're doing on any given moment in the time, at least in my book.
And Simpkins, thank you for your comment, Keith. I don't know if you saw that. And I'm going to correct you, Keith. You're too smart to do politics.
No, baloney. No, I
don't know why all these lovely ladies are like fawning over Keith. Like, what does he got that we don't have them coming to us? Like, there's been 3 already. Like, we love Keith. Yeah, so do we. Come on now.
You love him too.
You guys are very kind.
I had a political science professor in college, and it just did. Brilliant guy. Dr. Como was his name. No relation. And I said to him one time, I'm like, how come you don't run? He goes, well, the old saying is that people who are smart enough to run the country are too smart to enter politics. I've always remembered that.
I share that opinion. And here's the thing, right? And it's not because the people in politics are bad. And again, I don't do politics. I don't care which side of the aisle people are on, left or right. What I focus on is, how is this going to impact the American people? How's it going to impact the global population? What does this mean for the great companies of the world? How do we get our hands around that and live the lives that we want to live with purpose and with meaning? And so, that's how I look at the financial markets, fellas.
All right. So I'm going to ask you a question about the Fed then.
Okay.
In that theme that you just mentioned, in that sort of background that you just mentioned, they revised their growth estimate higher, right? They revised unemployment lower. They have the same median rate, right? And they revised their core PCE forecast higher.
Yep.
Yet, same median rate a year from now, or I should say at the end of 2024. The only thing where I saw a little bit of movement was 9 of the 10 FOMC members, voting members, said 2 cuts or less. But overall, the median rate still ended up being about 4.65%. Is this another bit of, look at this. I mean, they're everywhere.
It's crazy.
Donna Wheaton.
Thank you, Donna.
Karen Zunger. What is your formula? All right.
I'm shaving my head. There's immediately when this is over. Maybe that'll work.
Let me go back to the question. So given that revised growth higher, revised unemployment lower, revised PCE core higher, are they accepting a higher rate of inflation without saying it?
Okay, so there's 2 things that come to mind on that. I think, yes, there's probably a psychological acknowledgement of that, but I think this also speaks to the fallacy of the models that they use. They've got hundreds of PhDs that presumably work for the Fed, not one of whom, or very few of whom, have probably actually got real business experience. So when you put those things together, what you're left with is a series of mathematical models that by their very definition are completely fudged and more cooked than the Christmas goose. If they're revising estimates up, it's because they've tried to curve fit or adjust that math earlier. So if you think back to how moving averages work or means work or those kinds of things, anytime you get an outlying data point, the first thing they do is revise or adjust data theoretically to make it more accurate, but it doesn't move the needle because they've got such a long recursive look at all of the data behind. Now, in plain English, what that means is they're driving down the road using the rear view mirror. They're great until they hit a curve.
Okay, can I jump in, Bobby? Because I have
Yeah,
a question.
go.
So one of my trades for 2024, and again, my main trades are gold, Bitcoin, real estate, whatever. This is even going to surprise Bobby too, because I've been doing a lot of research on small caps, on the Russell. The Russell futures broke above that 2000 level. Seems like it's consolidating, ready for a move higher. They seem to want low rates. Remember, the higher rates disproportionately hurt the smaller companies because they're exposed to that more. Is the lower rates going to help them? Is potential onshoring from whatever global conflicts we're getting into next, is that going to help Russell? Is that one of your focuses for 2024?
Are you asking me or are you asking Bobby there?
I'm asking you, Keith.
Well, so I am of the belief that we need to go bigger, better, stronger, balance sheets, corporate execs, and financials. So small companies are definitely going to be there, but they're going to be there to the extent, Jim, in my opinion, that they are partnered with, supplying to, or being purchased by the larger players. Because this market right now is so liquidity driven. It's concentration, survival of the fittest. We put it best names only because everything else is a risk I don't want in my portfolio. So our trades are set up to look for those kinds of relationships.
Okay, so I get what you're saying. So you say it might work, but not for the reasons I want it to work, and I like that. You're saying liquidity. Before I bring Bobby in the next question, when you say liquidity, are you looking at the fact that M2 money supply is actually growing? M2 money supply is actually $2.5 trillion over it would have been had we just kept increasing it at the same ridiculous level from 2011 to 2020. And is it government spending driven in your mind?
That's the first layer. There's definitely that government spending, again, if we go back to the Fed, right, they don't have a rates problem. They don't have a labor problem in my book. This is my argument. What they've got is a fiscal problem. And the fiscal problem is that our government continues to spend. Now, as long as all of that money is sloshing around in the system, it has a very perverse reaction. It's not the direct linkage that, I submit matters. It's the fact that big traders can now leverage up to their eyeballs almost instantly when they want something. They can go to the window, they can get their stiff funds. When the rates come down, they can borrow money just like they go to the bookie on the corner. They can lever up anything they want, and they do it until they can magnify their returns. And then when the stuff gets volatile, they hit the eject handle and down it goes. So this is why you can bring in zero DT options. This is why we're seeing these massive volatile swings now. We're also seeing the combination of computerized markets and passive investing, both of which amplify that relationship. So liquidity, as we use the term in our office, implies the direct leverage that big traders, the Citadels of the world, the dark pools of the world, the block houses, the ice houses, anybody running that sort of intermediate layer is using to run the markets on a daily basis.
So I just put a chart behind the screen here. If we could put that up, talking to the people behind the curtain. This is fiscal deficit spending. This is from Invictus Research.
Mm-hmm.
Full disclosure, I think I can zoom this in a little bit. I have permission from Mike Singleton of Invictus to use this, so I would never do it otherwise.
They do good work.
Yeah, they do. He does really, really good work. Mike's great. He's been on the show as well. So if you look at the long-term average since 1974 of fiscal deficits, we're talking about 3.7%. Now, obviously, this area here, I'm going to see if I can draw on this. I think I can. You know what? Did I just get rid of the chart?
No, it's back.
Let's see.
I have very little hope for this working, though. If you're asking. Oh,
can you see? Look at that.
Oof.
This is obviously a pandemic.
Yeah.
Right. Well, what we see here is still this trend here. Even if you just kind of go with where the trend was going, right? Just take this out. And you see, obviously, an increase in fiscal deficit spending. Now, that normally only happens in recessions, right?
Mm-hmm.
And obviously, the projections right now, by the way, this is for this is from the Office of Economic whatever from the government. So it's a nonpartisan OMB. So when you look at these projections, you see increased deficit spending, which again, normally only happens in a recession. Generally, they're trying to pull back spending in this kind of a market. Do you see this as fighting the Fed? Do you see this as helping a soft landing? How do you see that? You mentioned a fiscal problem.
Well, again, this is a super tricky one. I've given an awful lot of thought to this. I see the markets. This is, again, where we come into the best, not the rest. Why we go for those large caps, those big, strong players, is because I think based on any number of problems, broken systems, whether it's car insurance, healthcare, mortgages, real estate, the border crisis, doesn't matter how things in this country are not working the way they're supposed to. So the government has continued to step in. Now, good or bad, I don't care. What I do care about is the fact that technology continues to be the necessary piece of this puzzle. And I think we can have almost 2 layers of spending. So I don't view it as a precursor to a recession. I don't view it as anything nefarious. I think it's simply the government. Big government equals small wallet. It's going to have a disproportionate impact on the marketplace, but it is absolutely possible to be a bull market strategist in an economic bear market, which is where I see that figure going.
Yeah, I agree. And I wanted you to tell me if I'm crazy with this particular view that I have now. I think that we're going into a reflationary environment. And, I'm a big fan of some of the things Jim mentioned, that he was long copper, gold, and those, because people talk about gold being an inflation hedge, and technically it is, but the correct term in this particular case is it's an asset. And in inflationary regimes, we get asset inflation. So it goes up along with stocks, along with real estate, right? The things that go up during an inflationary cycle when the Fed is not tightening and trying to address it, right? I think that's why, and this is where my question comes, I think that's why I've been struggling for 2 decades as to why do we have to have inflation? And I think it's because we want asset inflation. First of all, am I nuts on the gold thesis? And second of all, do you think that's why they want any inflation at all?
Well, I tell you what, I'm not smart enough to figure that out. What I think about is that the very definition of money is changing. That's what makes the current market environment so very tricky. Is many of the models that we historically use to assess those relationships are malfunctioning, if not terribly broken. So, to me, it's not a question of inflation, reflation, expansion, recession. To me, it's a question of how does the money actually keep moving? So when I look at this, I want to find those companies that are going to move no matter what the Fed does, no matter what the price of gold is, no matter how the economy functions. That's the stuff that I think for the next 5 or 10 years, and AI is a great example. That's the stuff that I think is going to be, of legend in 30, 40, 50 years when we talk to our children, our grandchildren, our great children and say, oh my God, you guys you lived through that? That was the launch pad.
To me, a bunch of those for us, isn't there?
Yeah, I think if we look at history, we're quite possibly entering into what Peter Diamandis, I think, correctly labeled, an age of abundance. It just doesn't feel that way because we're still in the middle of it. We don't have the luxury of looking back at it in the rearview mirror yet.
So tell me this. So you mentioned big caps, you mentioned tech, and you mentioned AI, all 3. So to me, that seems like the recipe for the Magnificent 7 or the Fabulous 4 or whatever we're down to now. Do you think those things have run too far, or is that still attractive to you?
They're not all tech is the same. So, I won't look and say carte blanche, the Magnificent 7, this is great, or we're going to get to the Fabulous 4, where then it's going to be the Terrible 2, and then it's going to be the 1. So no, I don't buy off on that. But what I do buy off on is that companies like Apple, for example, I think is going to have an iPhone-like moment come June. It's going to be on par with when Steve Jobs introduced that in 2007. It's going to change the world because I think that company is a lot farther in AI than everybody understands. When that happens, the trickle-down effect to all sorts of other industries is going to be phenomenal. On the other hand, I see a company at the other end of the spectrum, like a Palantir, for example, that came roaring off 6, is now in the $23, $24, $25 range. People are beginning to understand that thing's for real. That's the kind of thing as we look at data and it expands. So those relationships are not going to be interrupted. They're not going to get diminished. And so to me, those are the vanguard. So if I'm going to look at the tech stocks, if we look at 1999, for example, which, we all three lived through and many people listening along lived through, everybody says, well, gosh, these are overvalued. It's a bubble. I say, no way. Because back then it was characterized by freshly minted IPOs with no real revenue, no real business. Many times these companies were losing money, absolutely, what over elbows. And then finally, excess spending was just the normal way of going about things. Today, this charge is being led by very advanced, very large, very profitable companies. The debt spending is a dirty word in the C-suite unless it's being used very specifically for expansion. And for the most part, the incubators are still private. So the investing public is not on the hook. That's a very different environment to me. So particularly when I look at PE ratios, which is, I hear from a lot of people all the time, PE ratios are so high. A company like Palantir, 60, 70, 80% times and whatever, fine. But on a forward-looking PE ratio, you're talking about 35 for Nvidia. So it's right comparable to Microsoft. It's comparable to Apple. It's far less than the 400, 500 times earnings that we saw in 99.
So I don't know if you saw Jensen Huang, his interview with CNBC yesterday, and whoever the interviewer was, and I hate mentioning the name of that station because I don't think they do a service to many traders and investors. But anyway, the question was, why should your company be valued at 2.4 trillion, whatever? And his answer, I didn't like at all. I wish he had a consultant, because here's what I think he should have said, is that the market determines what the price of my company is. All I can tell you is that we have a great company with great plans, great growth prospects, and I have a ton of my personal wealth locked up in it, and I'm comfortable with that. That's not what he said. He said, like, well, I can justify it this way, and he went into the whole thing. It seemed like bullshit to me. That was just a comment more than Bobby.
Yeah. So one of the things that troubles me is not the right word. First of all, by the same token that I just said we're reflating and you want to own assets, I own the stock market, right? I'm bullish as can be right now until something changes, especially after this Fed meeting, right? When they basically said they're going to cut rates, even though my analysis shows they shouldn't. But I'm like you, I'm a strategist. I don't care. There's what I think they should do and what I think they're going to do. And the right side of that is the correct side of that.
Right.
But what do you say to people that say Cisco was profitable? Cisco had a great product. Cisco was right in the right place at the right time, working on the right thing with their routers. And the internet came about, which is still here and still massive, right? And there's still people trying to, I know you remember this, there's still people trying to get to their break-even point in Cisco. What do you say to somebody that says, I think NVIDIA is Cisco?
Well, number one, they probably got ahead of their skis and didn't use risk management. So number one, I'd question how they got the stock, why they got the stock, and why they held it if, that was the scenario. Number two,
it's not me, by the way.
Yeah, well, I would look at, I would also say, okay, did Cisco make must-have products or nice-to-have products? The problem is Cisco is a lot like Kodak. They had a great product. They did what they did, but the market came upon them, swallowed them up, and moved ahead. They didn't. So, again, if I'm looking at a company like Nvidia, for example, you're talking about 80, 90% market share. You're talking about the top 4 customers buying every chip that company can make for the foreseeable future. You're talking about linkages with the biggest players of our time into robotics, into Apple Vision, these kinds of things. Very different than Cisco showing up and going, well, we got a router. Okay, great. I got a farm. I got a haystack. I got a pitchfork. What do you want? That's a different environment than the guy that shows up and says, you know what, I just bought the farm. I own every last thing you have here, and here's the relationship. I now control the food supply. That's NVIDIA. So
it's different than, it was a lot easier, and I'll say this about Cisco, it was a hell of a lot easier to duplicate that technology than it is to duplicate and catch up to NVIDIA's AI dominance. I mean, they got such a head start on something that's complex.
Well, but also too, Bobby, if I may, remember what happened, right? Think back to when NVIDIA first made that pivot, right? 2011, 2012. And, I caught a lot of flack from this. I mean, an amazing amount of guff about this because I had a hunch what was going on. I just figured out what Jobs was doing with the iPhone in 2007, 8. Figured, okay, he's not building a phone here, he's building a platform. And then I watched NVIDIA, which was a gaming company. And everybody said, what are you doing talking about AI? What are you talking? You're a gaming company. But I kind of looked at it and I said, well, wait a minute. gaming companies are on the vanguard of artificial reality. They're on the vanguard of what at the time was the massively, what they call it, massively multiplayer, I can't, Morph or Morph, whatever the acronym was. But I looked at it, I thought, okay, this has the capacity to do something really, really unique. So the herd often doesn't get it right. The herd is comfortable with where we've been. It's like they're trying to preserve silent movies in the era of talkies. Now we're seeing the same thing with regard to Nvidia. Everybody's saying, well, where are you going? Well, Intel made the very mistake that we're talking about. They are concentrating on AI for PCs. I'm like, where's the PC market? Nvidia is looking at data centers, and AMD is looking at making those things efficient and giving the pipeline more breadth. But Intel's still over here, and as much as I think Pat Gelsinger is the right guy at the right time, is super smart, really like him personally, super sharp guy, I think he's lost the plot. Why are you still going after PCs when the whole market's moved on and you haven't?
So tell me, you've outlined the tech thing. I think is brilliant, and I agree with you on much of it.
Thank you.
Is there something outside of tech that interests you for the next 5 years as well?
Absolutely. Healthcare is the biggest, bar none, for two reasons. I think we're going to see healthcare incorporate a lot of the AI that's on the cusp of that. But what really is important about healthcare is that we are on the cusp of customizable medicine. And so the benefit to humanity, and we've gotten just a taste of it with the weight loss drugs, but imagine what happens when you can suddenly go to the doctor's office and get a medicine that is uniquely tuned to your DNA or whatever physically is going on with you. There's no spray and pray. There's no hit you with a garden hose. There's no give you preventative courses of anything. Suddenly, we have the ability to treat every single human being on this planet with diseases that have kicked our butts for thousands of years. That, to me, I think in the next 3, 4, 5 years is extremely compelling. Defense technology, unfortunately, war is a growth industry. But if we look at history, war also tends to produce really, truly brilliant breakthroughs that the rest of society can use when the stuff is no longer hitting the fan.
So you mentioned healthcare, which I think is interesting too, because was it Shayna who talked to us, Bobby, who was talking about healthcare and new medicines, and people.
That was Shayna.
Yeah, will part with a lot of money to get things to make them feel better when they're sick. But then I wonder, will the government allow that? The government does not really love someone hitting a home run with this. So is that a counterbalance to that, or it's not even significant enough to mention?
I think it is. I think it's an important counterbalance because, one of the things we learned from COVID is that just how badly out of control the FDA and the drug approval process is. How many times have you guys been, I have a Japanese wife. I've spent loads and loads of time in Asia. We have a home in Kyoto. I've learned that over the years, thousands of years of history and medical knowledge in truly ancient societies that Western doctors haven't even begun to discover. So, I think that there's some bleed over. I think government agencies, and, maybe I'm just a cynic or naive or both, but, I think that technology is ultimately going to leapfrog any regulatory agency that tries to stand in its way. So we're going to see that go by the wayside, probably not immediately and not without a fight, but I think we're going to see the FDA radically reformed. We're going to see companies beginning to figure out medicine that isn't truly medicine as much as it's deliverable, customizable technology.
I've got a lot to say about this, but it's not you interviewing me. So what I want to do instead is say that, or ask you rather, are you talking about biotech, or are you talking about pharma, or both, depending on the situation? And then we've got a viewer question I want to ask you.
Sure. Yeah, I think it's both. I think it's going to be biotech. I think it's going to be pharma tech. But also, one of the things that I think is really cool that not a lot of people are thinking about is imagine 3D printing, for example. We're going to be able to print very quickly customizable medicine in your own home. So what happens to the pharmacy chains when suddenly you get a prescription, you get to your biometric printer and your BioGlop printer, and it can print medicine for habitual diseases. It can print insulin. It can print anything, other things. If you've got a burn victim and you need to print skin, if you've got somebody with a spinal injury, you need to print a cord or a synapse or something to those effect. We're not that far away from that stuff.
Everybody who's a fan of Marvel movies, which I am, will know exactly that's happening in Marvel movies. So it's going to happen in real life. We do have a viewer question for you, and it's about Palantir.
Sure.
Janet, can Palantir be duplicated like Cisco? I assume she means the products.
I think that's a really interesting question, Janet. So my take, based on what I know about the company, is no. And the reason is there's a couple of things. Palantir, number one, has a unique understanding of how big data works because they've built the engine that allows all of that to be put together. Second, they have a very unique boot camp structure. So they introduce corporations to the product in a very effective form that lets them play and discover relationships. That is an extremely effective, what they call land and expand sales strategy. Number three, they are already connected with medical, commercial, and governmental agencies, and they are prime contractors to all of those things. So the company is growing at 40, 50, 60, 70% a year with incredible profit margins. And because every product delivery is customizable, there's very little in the way of competition in terms of how they're going to usurp that. So yeah, a competitor could come along, but it's going to be extremely tough to get into that same space. I think Alex Karp, CEO, takes no prisoners. He is unabashedly proud of the company he's built and supportive of our warfighters, supportive of our government, supportive of our national interests. That to me is a very, very powerful combination.
So in your opinion, they're Amazon. In other words, they're so far ahead and they're so much better at it that, yeah, somebody could come out with something similar, but they're not going to get anywhere.
I would say there's a healthy dose of that. I hadn't thought about it in those terms before, but yeah, I would agree with that assessment.
Okay. So tell me this. Okay, today at the start of the show we talked about the Fed being more dovish than I think the market thinks they should be, and certain things reacting to that. Okay, we're all old, so let's just end on that. We're all old. So the point is that Bitcoin. So Bitcoin's gone through the roof. BlackRock's gotten into Bitcoin. Halving's coming up. Are you interested in Bitcoin? Do you believe in the technology, or do you believe in the price going higher? What do you think?
Well, I've owned it off and on over the years. I don't own it now. I probably won't ever own it again. That said, I share Jamie Dimon's opinion. The blockchain technology is very real and is going to be very, very valuable. Bitcoin itself may or may not be valuable. To me, the fact that George Soros and his bunch are in it and they're trading it, my hat's off to anybody that's in it. I know you're in it, Bobby. I think you've mentioned you've in it, if my memory's right. Mm-hmm. So hats off to anybody with the guts to trade that thing. I'm going to stick with JP Morgan, and I'm going to stick with the blockchain technology itself rather than the coins.
No, and that makes sense to me. And again, my participation in Bitcoin, at first it started out as kind of a lark, like I don't know what it is, and I put some money into it. Well, that money grew to a significant amount, and I'm just looking at it like, shit, I don't really want to pay the government any capital gains, so I don't, because I don't believe in it as much as my position would suggest I believed in it. And
well, right. And we to come full circle back to the Fed. This goes back to a trip that I was in mainland China at one point, and I was standing in a bar in Shanghai and I was listening. This is kind of when I really dawned on me that Bitcoin is a really interesting construct, because I heard a bunch of Chinese bankers and senior executives talking about digital currency. When that happened in the United States and Bitcoin came out, our government went, yeah, so what? Most governments around the world and central banks went, yeah, so what? China went, we can do something with that. Right. So they are considerably ahead. They've got their digital yuan, which is out there. It's being transacted, everything else. But this is where I think our government doesn't have a clue, or maybe just a tiniest fraction of an understanding of what's going on. Because imagine if something like the digital yuan becomes accepted inside the United States. You go to your grocery store and say, how do you want to pay for that? And instead of using US dollars, you use a digital yuan. That's the stuff of nightmares for Jay Powell and his crew, and for Janet Yellen. I've got to imagine if they have any kind of awareness as to what that possibly means for the US dollar.
I cannot believe you would insult the intellect of the federal government. How dare you? So, hey, yeah, I agree. That's a joke for all of the new followers that have come in, and Keith's harem or whatever we call it. That's a joke.
No, it's not. These are wonderful people, and I've got the extraordinary privilege of having them here today.
I'm jealous as hell. They all ask great questions. They seem dialed in. We historically, our demographic has been mostly men. I think that women prove to be better investors, and I know why women are better investors, by the way, because they are more loyal. You know what I mean? They are they go things slower, where men they're disloyal. They're like, oh, you lost 5%, you're out. And what's the next thing? So women tend to be better investors. Anyway, that's not the question. I like women. Gold. Does gold belong in a portfolio? Do the miners who pay dividends? What do you think about that?
My position on that is everybody should have a little bit of gold. You know, the question is, how do you own it? You know, personally, I tend to look at jewelry or some of those other things because I enjoy buying those things for my wife. I enjoy having them around. We have some family jewelry that we've been fortunate enough to inherit over the years. You know, so to me, it's a question of what do you intend to do with it? And I put it this way, right? Hurricane Katrina wiped out an area the size roughly of Great Britain, right? And when the damage occurred, people were not trading gold for their food. People were trading bullets, diapers, and medicine. And so to me, the question is, you know, why are you buying this? Are you buying it to stabilize the rest of your portfolio? Are you buying it because you think it's going to appreciate? Are you buying it because it's going to be a hedge against inflation? You got to sort out the why before you sort out the what, in my opinion. And so gold, to me, everybody should own some, but it doesn't necessarily play the role in your portfolio that we've been led to believe.
Before I go to another viewer question, I have been in and out of Bitcoin multiple times. It's strange to think about holding something long term that each time you've been in and out of it, you've been positive 3 digits in such a short period on a percentage basis.
Wow.
And that to me is like, why that's just wrong. And that actually reminds me of 2000.
There
Because
you
Jimmy
go.
and I both know guys, we were standing 10 feet from each other, watching guys who couldn't spell their name, making 40% in 5 minutes on Red Hat.
Right.
I mean, it was stupid to watch. But we have a question from Karen relating to EVs. Karen says Biden announces new rules for gas car emissions. I'm a fan of poor, beaten down Tesla. Will this action help EV business now?
That's an interesting question, Karen. So I think there's a lot to break down, and let's see what Jim and Bobby have to say about
Yeah,
this.
I'd like a crack at this one too, but go ahead.
Absolutely. So, you know, there's a couple different layers here, right? So one, I would encourage you not to think about Tesla as a car company. Tesla is a technology company that happens to make cars. It's about the redistribution, generation, storage, and creation of electricity. So to me, I'm not so concerned about the relationships with emissions or any of the other fancy pants stuff that they're trying to do to force EVs down our throat. What I'm looking at Tesla as, that is the vanguard. It is probably the only car maker capable of defending itself against the onslaught of Chinese makers that are getting ready to field units at 1/3 of the production cost in Detroit for a gasoline car. So it's much more than just the car. I'm a fan of Tesla. I own it. I plan to buy more. I hope I'm smart enough to buy more shares because I think the game is a long way from over. He's got an annuity in the charging network. He's working on robotics. He's got the largest real-time driving database in the world. Anybody who's going to try to set insurance ratings, teach their robots how to drive, do that is going to have to come through the door sooner or later. I think that Elon Musk, as controversial as he is, and he's one of these CEOs, you know, I'm with Ron Barron on this one. There's days where he just makes me nuts, and there's days where I think he's the smartest guy in the room. But doesn't change the fact that I think the company itself has set the bar in every industry it touches. And that's the frustration that Wall Street and investors have with Elon Musk, is that he plays by his own rule book and he's got the money to do it. So he doesn't care whether people think it's expensive. He doesn't care whether people think he's making mistakes. He doesn't care whether analysts who've never worked in the car industry think he's compressing margins. He knows where the game is because he's 3, 4, 5, 7 steps ahead. So I'm willing to wait this one out. Doesn't change my faith in Tesla one bit. I hope I'm smart enough to buy more shares.
So here's my quick take on this, and it probably won't be quick because I'm verbose.
Uh-oh.
I've been waiting to use that word. So I have a sort of a longer winded theory on Tesla. I think if you put Tesla on as an active investment, as a trade, you shouldn't be long it right now. If it's an investment, you should be long it and more.
I would agree with that.
Elon Musk. Yeah, I'm a huge fan of Elon Musk from a perspective of I think he's the smartest guy in the room, even when he's driving you nuts, which happens. In the new Roadster they're coming out with, they're putting in SpaceX tech in there. I mean, he's just way ahead of this stuff in terms of what you do. And I agree, it's a technology company. The problem Tesla had, in my opinion, is that it's a delivery platform for technology in one of the hardest places to build a platform consistently and cheaply, which is automobiles, right? If he would have picked some sort of, you know, wall screen desktop, I don't know, he would have been way ahead right now. I love the cars, and I love any American car company that did not F over Jimmy's dad. So I want to put that into context as well. Jimmy can tell that story in a second. So I like Tesla as a long-term position. I think people should be buying most dips of it, not every dip. If you put it on as a trade, okay, don't sit around and hold it saying, fuck, I need this thing to go higher. I'm sorry about the cuss. Don't do that. Don't turn a trade into an investment unless you originally thought this is a trade that I will hold long-term. Because the only time you're thinking clearly about a trade is before you're in it, not while you're in it.
Or as you guys know, you trade around core positions, so you can use trading to accumulate your investing. Yeah.
Jimmy? There's something just popped into my head. So you talked a lot about fundamental analysis. Do you look at technicals for entry points, exit points?
Absolutely. Good. Absolutely. So my background, I was king of the propeller heads when I was growing up in the nerd herd. And so my background underneath the hood is all nonlinear science, mathematics. We have servers running 24/7 back here that are crunching millions of data points every single day. And what I look for is clusters of what we call volatility. And it's not volatility as you traditionally define it, but there are any number of indicators you can use. You can use thrust indicators, you can use price deviation, you can use any kind of thing that measures how markets move, and you can arrive in a space that is a likely probable turning point. So we look at strategy and scenario at the top level. When we identify where we want to be and why, our research drops it down into a universe. My research suggests there's only about 50 companies out of 600,000 listed worldwide that matter at any given point in time. From there, we're going to match it up with, okay, which companies have the must-haves, who's got the balance sheets, who's got this, that, and the other thing. And then for the entries, yeah, it's technical.
Just before I give Bob the next question, have you ever looked at Kilberg's Essential 40 stock index? He tries to do the same thing, to challenge the Dow. Do you know what I'm talking about at all or no? Which is fine.
I do, but I don't know. Ours is built on a very different methodology.
Yeah, Bobby?
Yeah, we have our first question from a male. So I want to pick that up, because that's just a strange phenomenon with Fitz here. It's from Avery. Are you still bullish AMD, and do you think it has the potential to ever disrupt Nvidia? By the way, before you hit that, Micron Technology just had huge earnings while we were talking. The stock's flying. Go ahead.
Oh, good. I own it.
Excellent. I don't happen to own Micron, but I do own AMD and I do own Nvidia. So
yes, where you guys talk. Go on.
Yeah. AMD and Nvidia are different markets, right? So I wouldn't look at that as one going to disrupt the other. I would look at is one going to complement the other, because AMD is really about efficiency and throughput, and they're trying to do more with infrastructure that's out there. They're building great chips, super strong chips, but their purpose is completely different corporately. Nvidia is really, they're moving out here into robotics, they're into data centers, they're into this large scale production model. So to me, this is like Coke and Pepsi. It's the soft drinkers environment. It's the data environment. Anybody like a Mountain Dew or any of those they're playing around the edges. So to me, that's where Intel is. Intel is, Mountain Dew or Dr. Pepper. It's got market share. It's got rabid fans, but it is never going to approach the size or scope or scale of a Coke or a Pepsi.
Holy shit.
You want to tell that story about your dad with the car real quick?
No, my dad with the car. You're just talking about the fact that, he was in World War II, was sworn to buy America. We used to have this argument all the time through the 70s and the 80s, because this was my belief that GM, the big three, just took advantage of those World War II era people, knew that they had the loyalty, and started selling them shit cars, knowing full well that they weren't going to switch. So my dad and I, when the late 80s, early 90s rolled around, we used to have bitter arguments. I'm saying they are not loyal to you. Your loyalty to them is misplaced. We, in the economics world, you are supposed to reward the people who are making the better thing. We can be the nimble ones. So that's the entirety of the story too. I now only drive Hondas. What do you drive, Keith?
Well, it depends on what I feel like. So my wife has a BMW, and I'm a vintage car guy. So I actually have, at the moment, a 1986 928S.
Really? And what's your motorcycle?
Well, that one, I kind of got a bunch of them.
That's awesome.
Mainly, I love when I'm not working on the markets and I'm not, walking with my wife and our dogs and stuff. One of my passions is working with this old machinery. So my favorites to work on are some of the vintage BMWs, older Ducati. I like the art form. I like the peace and tranquility. I like the fact that, my work goes into cyberspace every single night, but I can walk down the garage. I can have a wrench in my hand, and I can feel, look, breathe, smell at something that has real craftsmanship and real engineering to it. And that's very peaceful to me because, and this sounds very strange, but I mean, not to get too far off track, but the world is a real place and it's filled with real people. And when I work on something like that, I can feel the craftsman that worked on it. In some cases, I've found craftsman's marks on the inside of the engine cases, or when I've been riding the motorcycles around the world with my wife, we've met the most incredible people because we share a passion for whatever machine we're on that day.
Okay, first of all, you make me feel shallow, so I'm starting to dislike you because of that. Because I don't do shit like that. I don't know anything about.
But you got a restaurant, and I couldn't run a restaurant to save my life. No way.
That's a great point. Okay, so now I like you again. All right, good. Okay, do you think this is a not an investment question? Do you think there would be a marketplace, and I don't think it's even legal anymore to do this, to make a car that lacked any technology for Luddites who want to stay off the grid, but you can't even do that anymore, right?
The first person that comes up with a sub $20,000 car that is just a car and not a sensor platform is gonna make bank.
Yeah, I don't think you can do that because I think legally they have to have all these technologies in them, right?
You have just hit upon something that I think is so genius and at the time so prohibited. I mean, there isn't a government on the planet that will let you build the dang thing. So you got to be living like on an island somewhere to produce it. But I think that is absolutely the way we should go because, look at what's happening with these cars. I was just writing about this to our clients yesterday. They're taking all this data from the cars, right? And they're selling it to the credit agencies and the reporting agencies. And guess what? Your insurance premiums are probably going to go up. The way you're evaluated for credit is going to go up. It's going to change because of data you've been productized, and we have no say in it. It just enrages me.
So we're talking about cars. We have two cars, a Japanese car, which is a hybrid, which Mike runs up 15.3% post-market. One is a hybrid, and we have actually, Jimmy and I are speaking April, what is it, 13th or 12th? 12th, right?
12th is Friday.
April 12th at the Money Show in Miami.
Excellent.
Are you going to be there?
No, I'm going to be sitting that one out because I can't get from the West Coast to the East Coast, but I will see you fellows hopefully in Silicon Valley or Orlando at another Money Show.
It's difficult. So if anybody's down there, link in both of our Twitter bios on occasion. We'll throw it up there. Come down and see us. We're going to be interviewing Tracy Shukart. We're going to be talking to Anne-Marie Band. We're going to be just doing our own. Actually, this show is going to be from the Money Show. We're going to be grabbing whoever walks by, celebrity or not, and talking to them. So if you're walking around, we're liable to grab you and say, come in here for 2 minutes and talk to a couple of Italian idiots. But so we have a hybrid, but I also have a 2020 Dodge Challenger with the biggest engine they make, and it is sold out, and it drives my neighbors crazy because I love vintage cars.
And it puts a smile on your face every time you turn it over.
It has a remote start, and I'll be in a shopping center, and I'll start it as I'm walking by it to scare people. I like to watch them jump when the thing starts up. It is so Italian and tattoo, and I love it. But I also had a Harley for a long, long time. I had a Street Bob, but my wife wouldn't get on it anymore. Once I started falling off my actual pedaling bike, she said, you got to get rid of the motorcycle. I can't.
That's kind of a limiter. Yeah.
There is one more. And by the way, the vintage car thing is part of why I like Tesla because it's an American company.
Yep.
Anyway, there is another question here I want to ask from Frederick. Do you have any concerns worldwide antitrust dismantling Apple? Remember AT&T and IBM? Or other companies?
Apple, no. Google, yes. And here's why. I think that Apple is smart enough to thread that needle. And on top of that, Apple has arguably made consumers' lives better. So this is an area where, for example, the law has not caught up with that. Most of the antitrust regulation that was established in the 19-teens, the 20s, and the 30s was predicated on the notion that consumers were harmed. In fact, consumers have benefited from companies like Apple and others. Where you're going to have trouble and where the law might have some teeth is all the trouble that Meta got into with regard to how it structured its programming. what it knew and when. Google now has significant antitrust problems because it's built its entire business model on search engines. It's now just gotten a 250 million euro fine in Europe because the watchdog agency in France said, hey, wait a minute, we've got intellectual property rights and you abused that when you started training Bard, now Gemini. So it's a one-trick pony, and it's interesting. I think we're looking potentially at the end of Google as we know it. So yes, I think Google's got a problem. No, I don't think Apple's got a problem. But other antitrust areas that I'd be concerned about are necessarily going to relate to areas where we don't think about them. I think it might come into some of the medical companies now, somewhere we've got generics, non-generics. Imagine what happens when we introduce technology to that and suddenly somebody can't compete because of it. I don't think the legal system is ready for that one. Or when we have chips, we have those kinds of things. That's where the people who haven't been able to field a product are going to sell vaporware and ultimately complain.
So I'm about to say something, and let me finish, and then I'm going to ask you how crazy you think it is and how tinfoil hat dig a bunker it is. You said Google may have problems too. And listening to the Mike Benz thing on Tucker Carlson a couple of weeks ago and doing some research on it, what if, okay, let's just say we were the world's intelligence agencies and a company came out like Google, who is excellent at gathering data, better than we've ever been at gathering data. It would be stupid of us not to infiltrate that company on some level. You will give me that point, right? That intelligence agencies probably do. Then you look into the fact that Google was started with a Defense Department loan. Some of the angel investors were, in fact, the CIA. I do, and I use Google, by the way, too. And is it on a scale of 1 to 10, 10 being nutty, no one should listen to a word I say, 10 being that it's reasonable, 0 being that. Do you think, I don't worry, I own Google and I don't worry about it being broken up for antitrust thing because I think there could be some really, really powerful hands on the levers. Is that crazy or not?
No, I don't think that's crazy at all. It just depends on how you come down on the issue. And, you came down very articulately. So I don't see that a problem at all. I think, the issue that I talk about, people say, I'm worried about the Chinese, I'm worried about the Russians, I'm worried about the North Koreans. Well, if you got a Facebook account, Instagram account, you use Google, all your information is already out there anyway. An intelligence agency doesn't need it. All I have to do is subscribe and like a few people and bingo, you're into the system. Right. And the AI is being trained against that data, never mind the classic intelligence agencies.
Bobby, you got anything to close it out?
Yeah, Martin Burke asked if I have a Hellcat. I don't have a Hellcat. I have a Scat Pack that I then took to a guy.
You guys speaking English anymore?
Listen, off the showroom floor, the Dodge Challenger Hellcat has about 717 horsepower.
Woo.
I took our car to a guy who brought it up to about 705. So it's the biggest engine they sell, but I had it tuned up to near Hellcat levels. I'm actually going to do this for you guys because you guys are friends of mine. I'm going to see. Can you hear this? If I put this by my speaker. Here it comes.
Oh,
it's so obnoxious. Jimmy, this is the car version of you as a human being.
I was so obnoxious, just like you, Jimmy. I like that. Good. I just realized why I don't like cars like you guys like cars. Like cars to me for the first 20 years of my life, we had 4 cars when we had a house of 11 people. But none of them actually worked. You'd have to grab one piece from one car, put it in another car, and then get it to work. And then there'd be 10 feet of snow. And I just hated cars. I think it could push you one way or the other. So that's why I just get my Hondas. They run, and I don't want to work on them anymore because I don't want to be screwing shit to get a car to run. Does that make sense?
Fair enough. Yeah, that's fair.
Yes, it does.
Keith, will you tell the people where to find you? And Keith is a wealth of knowledge, so please listen to this part.
Oh, you're very kind. Thank you very much. The easiest thing to do is, I'm pretty low key. Just go to KeithFitz-Gerald.com. And if you look for the 5 with Fitz. That's my personal notes. I've written them every day for decades to help clarify my own thinking. There's 0 filter between my brain and the mouth and what comes out of the keyboard. And it's free. And I write them every day. The markets are open. So if anybody would love to, I'd be honored.
Love it. Thank you. And thank you guys for tuning in. I knew this would be a great show. Keith is always excellent. But the reason this show is successful is not as much because of us. It's because of you guys. Thank you all for tuning in. This has been Tradier, the Trader's Edge. Thanks.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.